Hey guys and gals, Greg Silverman here, Chief Investment Officer, lounging out by the pool. Another Come Learn With Me session. These are articles which we curate, which you all like, and then we do a session where we read them together and try and ingest some more information. This one falls under our cybersecurity mini group theme. If you want to know more about our mini groups, take a look down below. We've got links to our LinkedIn mini group thematics where we do most of our investment research and thinking. So without further ado, let's read this one. SEC released proposed rules on cybersecurity. Upping the ante on cybersecurity, the Securities and Exchange Commission charts out an aggressive linear path to increase the current regulatory ask on cybersecurity for investment advisors and funds. On February 9, 2022, the Securities and Exchange Commission voted 3-1 in proposing new cybersecurity compliance reporting and disclosure rules for the investment management industry. The magnitude of change contemplated by the proposed rules would be hard to overstate, and the Commission's release is in line with growing anxiety surrounding cybersecurity threats globally and nationally surrounding infrastructure, as it demonstrated here with the capital markets. If adopted, these proposed rules would apply to registered investment advisors and certain registered investment companies and business development companies. The proposed rule requirements can be broken down among three major critical control initiatives: cybersecurity risk management policies and procedures, reporting of significant cybersecurity incidents to the Commission, disclosure of cybersecurity risks and incidents. By the way, there was an article in Barron's talking about the SEC cybersecurity rules for public companies, which you should check out. It's kind of interesting. All right, so line team analysis. The proposed rules, if adopted as they stand today, would increase the substance, complexity, and frequency and sophistication of the work product and deliverables required to demonstrate a model cybersecurity program. However, many of these requirements have long been mandated as part of the current regulatory landscape by way of the Graham-Leach-Biley Act, which gave rise to Regulation SP, the Safeguards Rule, as well as Regulation SID, Identity Theft Red Flag, and numerous other express directives from the Commission in the form of risk alerts, guidance updates, and other interpretive material, as well as enforcement actions by the Commission. In this sense, the proposed rules are merely a formalization and natural evolution of these requirements, and whether in the form of Commission enforcement actions, regulatory examinations, cyber sweeps, ODD reviews, and/or investor expectations, these requirements remain as absolute core cybersecurity controls that both RIAs and registered funds must implement and be able to demonstrate. Still, the proposed rules seek to substantially increase the current regulatory ask on cybersecurity with sweeping changes to the nature, processes, and substance of the underlying compliance requirements, and for that reason, all registrants and even non-registered and exempt advisors and managers should be paying attention as this plays out. What you need to know. Pending the advancement of the proposed rule through the comment period and the agency rulemaking process, here's what investment advisors and fund managers should need to know. Cybersecurity risk management policies and procedures. The first category of controls mandates a more formalized approach to cybersecurity compliance and requires RIAs and registered funds to adopt a cybersecurity risk management program, similar in spirit and substance to the compliance programs currently imposed on RIAs by the Investment Advisor Act of 1940. The Commission would seek to create a new rule, Rule 20649 under the Advisors Act, which will require RIAs to adopt and implement various cybersecurity policies and procedures that are commensurately tailored to the size, sophistication, and resources of the firm, and which should include the following components. Required elements of policies and procedures. Annual risk assessment that address cybersecurity risk associated with the underlying information system, information processes by such systems, including the risk associated with service providers that process such information. User security controls that limit user-related risks while also limiting unauthorized access and use of personal information. Information monitoring protection, including performing periodic assessments of the underlying information systems and the information that resides on the system. Threat and vulnerability protection to detect, mitigate, and remediate information system breaches. Cybersecurity incident response measures to detect, respond, and recover from cyber attacks. Board oversight. I'm just going to read the highlights here. Board oversight, annual review with and required written report, record keeping requirements. Reporting of significant cybersecurity incidents to the Commission. The proposed rule Advisors will be required to confidentially report significant cyber breach incidents on new form ADVC within 48 hours of concluding that a significant cybersecurity incident had occurred or is occurring. Significantly, once a form ADVC has been filed, there's a continuing obligation to amend it if there are new material or information about a previously reported incident or if that incident has been resolved. What is a significant cybersecurity incident? It's defined as one or more cyber incidents that significantly disrupt or degrade the advisor's ability or the ability of the fund or private fund client of the advisor to maintain critical operations. A significant cybersecurity incident will also be deemed when sustained harm is done to the advisor, client, or an investor in a private fund through unauthorized access to the advisor's information. The Commission believes the report of this information will allow it and its staff to better evaluate potential systemic risks to the financial market. Disclosure of cybersecurity risks and incidents. ADV Part 2A to require RIAs to disclose cybersecurity risks and incidents to advise. Additional observations. Cybersecurity risk management goes beyond just investor information. The SEC proposing release posits that significant fund cybersecurity incidents may include cyber intruders interfering with funds' ability to redeem investors, calculate net asset value, enter or exit into investments or trading positions, or otherwise responsible operating its business and acting as a fiduciary. Disclosure of significant cybersecurity incidents, ADVC. Okay. A lot of reporting requirements. Despite the industry-wide misperception that requirements created to maintain these fundamental cybersecurity controls are conditioned on an RIA or registered fund's use and storage of investor PII, personal information maybe. The Commission has made clear this is not the case, and these required controls are not necessary to every RIA or registered fund, whether it deals with investment information or not. Okay. Well, this is going to be a big deal. I wonder when these proposed, does it say when the proposed are being voted on? It may have said it. Align is the company. Okay. Doesn't say when they're going to be adopted. All right, well, that's good to know. It's going to create a lot more work for compliance folks, so that might be a good and bad thing. And obviously, cybersecurity is heightened now. So hope you enjoyed that article. Please like and subscribe and join us again soon for another session of Come Learn with Me.